Hello, this is Matthew Chan.
And I am Tony Centavo.
Welcome to the new episode of the TurnKey Investor Show. And for you viewers who tune into this show on a regular basis, you're going to notice that my guest host is Tony and it's not Wes. And Wes could not be here for this episode. And I've asked Tony to step in since he's well versed with how I do things and as well as the TurnKey investor philosophy. So how are you, Tony?
Doing fantastic, Matthew. Glad to be here today.
So how does it feel filling in for Wes?
It feels pretty good, actually.
You're bumping him off.
Yeah.
I'm sure you bumped him off.
Yeah, well,
you planned this.
If this becomes a permanent fixture, then I guess it will take on a different context. But it's always a pleasure to get a chance to talk about real estate investing.
Okay, well, good. I'm glad. So you got some big shoes to fill here.
Okay, I didn't know that.
Well, Wes, I mean, if you see the episodes, he's got a lot to say.
Wow. Well,
he's got a lot to say.
If you're paying me as well as you're paying Wes, I'm sure I'll do just as good a job.
Well, anyway, I wanted you to be here today because I wanted to interview you, if you will. I mean, anybody who's checked out TempestBroadcasting.com knows that Tony Centavo has been my co-host on a number of different shows, and on this particular show, he's a guest host. But the thing is, Tony. The reason why I like having Tony on is he brings a very different perspective. I mean, he's not a clone of us. He has a very different way of looking things. I'm not saying that it's so different that we can't relate to each other.
Right.
But it makes for a very interesting conversation and very interesting comparisons. So, and today what I wanted to interview Tony about is his experiences now that he's way past being the beginner stage, and because you now have, two properties?
Two, yes.
And it's for a number of years, and they've been performing.
Yes, they have.
You haven't had too many bad things happen to you.
I've had some, but not too many.
Okay, well, you're still here. Okay.
I survived them all, yes.
Good. And we've made it, through the recession. We're still here.
Mm-hmm.
So I think that's something to be said. Now, I will also tell our viewers that you're extremely busy with your other business,
yes.
Your financial services business.
That's true.
So unlike Wes, who is what I call a full-timer,
mm-hmm.
You're more similar to me.
Yeah.
I'm not really a full-timer myself. I mean, Wes has become more of a full-timer than I am. Yeah. So we're both kind of part-timers running this show.
That's true. And I would say that Wes has developed a real estate business, whereas yours is publishing and the various other activities you're involved in, and certainly mine is very involved with the public as well as with my enterprise as far as real estate investing occupies a very small part of my mental space as well as my routine daily activities other than on occasions. So yes, the perspective is coming from how does this fit in and how do you make it work in the context of a very diverse life.
Now, there is one word that you used, which I thought was well suited for where I'm going with this. You said that real estate occupies a very small space in your mind.
Yes. Mm-hmm.
And you know what? For me, I actually prefer that too, to be honest with you. And because I have chosen for it to be not my full-time business, and it's never been. I've always said that I've gotten into real estate for investment purposes, and for it to be semi-passive.
Right. Mm-hmm.
Now, I mean, as you know, real estate has its ups and downs, and when there's turnover and there's bad times, there's times where it requires more of our resources.
That's true, yes.
And it creates more aggravation for us. But all things being equal, if we had it our way, we just assume have it run on autopilot.
That's true, and I always say that when real estate is at its best, you don't think about it at all.
Yeah, right, exactly.
And when it's at its worst, you have to think about it. And probably the contrast between not having to deal with it in terms of it being an investment that performs and having to deal with it when it's not performing is what makes some people crazy with it, from the standpoint of some people get a thrill from the active pursuit of it. And they want to keep their hands on it and keeping their hands dirty and stuff like that. And some people see it as an investment. I mean, from the standpoint of, some people want to buy stocks and sell stocks and buy.
Oh, I know.
actively
People love
engage in
it.
their
Buy and sell.
day
Like, they
trading and
love
things like
that stuff. They love the back and forth.
Right, yeah. Some people like me, I just want to invest in mutual funds and
Just
let
let
them
it
do what they are going to do over time.
Right.
See how the portfolio is performing, maybe change some,
Mm-hmm.
reallocate, those kind of things. But it's a matter of, are you doing it as an investment or are you doing it as an activity? So from the standpoint, I think you and I see real estate as an investment vehicle or
Right.
medium. And so, yeah, I love talking about that.
And one of the things that you and I agree with is, being as effective as possible. So it's not about spending a whole bunch of time on it. I mean, certainly you got to do your homework.
Right, yes.
Prior to you getting started, I remember you telling me that you had spent a lot of time, studying it.
Yeah.
Courses and books.
Right.
And
Mhm.
before you finally joined Wes and I in our Investors Roundtable,
Correct,
which
yes.
seemed to be the catalyst to, get you going.
Pulling the trigger, and the Investors Roundtable was where I got around other people who were at the same level, because I've been a member of RIA, where you had people from the whole spectrum, and I was at the end of the spectrum, hadn't read a lot and all that other stuff, just hadn't done anything, but then you got the guys who got 30, 40 properties, and
Yeah.
you meet for an hour or two, and it just didn't kind of get me clear, because there was no path, it's just what the topic was for the day, and all the
Exactly.
as a puzzle fit together, so I got a picture. But the great thing about the Investors Roundtable is we started together, and for me, it was a notion of having an end state was you were going to get a property. And then the other thing was, there was I'm a competitive person, so I wanted to be the first. But then there were the challenges that if you're going to stay in the group, you had to do it, and otherwise you get kicked out. So the dynamics were ideal for getting people beyond the personal fear hurdles and lack of knowledge that is what was keeping me over the years of buying books and programs, to getting from just thinking about real estate investing and actually doing it.
Yeah, and for those of you who want to hear more about the Investors Roundtable, I mean, that's one of our earlier episodes where actually Tony shared his perspective as well as Wes did. So, but now that you're way past the Investors Roundtable, you're a few years into it, how does it feel?
It feels
Now that you've become more seasoned, you're no longer a beginner.
I'll say
although your portfolio is not where you would prefer a larger portfolio, right?
true. 5 years in, and I think my 5 years, 3 of them have been in the recession. So I'll say that it feels good. In fact, I just got a property occupied 3 weeks ago that had been vacant, and other than it being vacant for a month and having had 2 other changes of tenants over that 5 years, it's been almost, when I use the word anticlimactic, it's from the standpoint that getting started, if you're new and you hadn't gotten your first property, or it's like you do all this to get it, but then once you've got it, there's really nothing else to do. I mean, it's like, okay, if you did everything you should have done to have a performing property, if it's cash flowing $200 to $300 a month, or $100 or $50, whatever you're doing, I'm just saying that once it started, there's nothing else to do. And I had to adopt an understanding that, okay,
No drama is a good thing.
that no drama is a good thing, because I
Right.
felt like I'm supposed to be doing
Felt a little
something.
guilty, didn't I? It was like it's
like a
performing.
guilty pleasure, yeah.
Am I supposed to do more?
But part of it is, okay, what am I not doing? And then I think there are opportunities to assess the management part, because as I think we talked in that early episode, most people get into getting the property.
Yes, there's so much focus on that.
But there's not very much discussion of the management process. And so I've learned a lot because I had properties.
Mm-hmm.
And it didn't all come from hard knocks and stuff. It's just that you realize, oh, I got to do this. Oh, I need to do this. Or this will be something good to do. I don't really need to spend money to do this. Those kind of management decisions that go into the process. That was the next phase of learning. And then with that going from 1 property to 2 properties, you start seeing where there's like opportunities to hit economies of scale and things like that. So if I can kind of end my commentary about it's going good, the shift in the real estate environment stymied me from continuing to add properties in the way that I was. But I've also learned and adapted. I've actually been pursuing, my goal this year is to add 2 more to the portfolio using different strategies. But certainly my goal is to, within the next 3 to 4 years, get to a modest portfolio of 10. And I think
Okay.
that was, where I started from my original intent, although the timeline has been changed.
Well, yeah, the recession has definitely changed things a little bit. There was a reduction in my portfolio. Had to get rid of some of those losing properties, and I guess the lesson for me is I should have made those decisions a little bit earlier.
Yeah.
It certainly would save me a lot of pain, but your pride sort of gets in the way of things. So, because I come from a different school of thought nowadays than when I first started out. See, when I was starting out, obviously the acquisition was really important, but not only the acquisition, but the numbers of acquisition.
Okay.
I fell into a fairly unhealthy, I would say, yeah, I guess that would be the word, an unhealthy mindset of that I had to acquire a certain amount of properties a year,
Right.
regardless of what was going on, in the economy or the market. And I think, and that came, I don't want to get into like the deep history, but that came from my involvement with a certain real estate guru and the way he was, he was always pressing people to continue to buy more properties.
Right.
The problem here is a lot of people self-destructed along the way because they got too many. And
past that tipping point where
right, I think there comes a point.
counterproductive.
Right, I think there comes a point where everybody needs to find out where their threshold. Like for example, you're thinking maybe 10, and having looked back, as you know, I have way more than 10. So I think that you could handle 10, and because I do think that there is some economies of scale, and I do think it's still manageable and for personal
yeah.
on your situation. Now, if you said you wanted to go 20, I would say, Tony, you may want to, not to say that you shouldn't, but you would have to reorient
Right.
the way you allocate resources. You may have like an assistant manager or, somebody to help you out.
Well, on that point, when I came to 10, I'll give you the benefit of my notion. My model is to pursue a $200 per unit positive cash flow.
Yeah,
So-
which is good for our area.
Yeah. So from the standpoint, I said, okay, 10, that's 2,000 that you can maintain those 10, and ultimately they get paid off. We find, you can over time leverage and increase that revenue.
Mm-hmm.
But then the other thing, I said, okay, if you keep growing, then you really, if you're not going to become an active investor or make real estate a business, then you either have to start, farming these out to management companies. And then I said, well, heck, if I'm going to do that, I might as well start a management company
Right.
and manage my own and manage other people, because again, you get to a point of economy of scale where, to maximize the benefit of it, you bring in more work. But not to get off on that tangent. So 10 is kind of my mark of, once I've done that, I've reached a benchmark of success. Now, I say 10 units because I'm thinking my model is 200. Now, if I get a property where I cash flow 300, I can say, okay, my goal is $2,000 a month in positive cash flow. If I can do it in 5 units, that's 5 less headaches that I'd have to worry about because I've got more efficient. Or if it wound up taking me 12 to get there, I don't know. But it's just something that I always tell people, unless you have a goal, whatever it is, you say yours was numbers, mine is revenue point. So I think the learning point is there are a lot of different ways to address this.
Yes.
But at the same time, have something that's not just a pursuit for the sake of the pursuit.
Yes, and I think that's well spoken, and because there is a very real, what I call management cost, and the management cost doesn't always have to be someone that you hire, but it could be in terms of your time.
Yeah.
So if you're not in love with real estate, like me, I like it, but I'm not in love with it. My passions are in publishing and education and so forth. I definitely want my investments to be paid off, and that's it. I want very, very low leverage. And as you said, if you keep buying, you really don't get the leverage under control. You're always leveraged out because you're always acquiring new properties,
Right.
unless you're buying at a very steep discount. And I have to tell you, now that I've been in it for well over 10 years now, it feels really good. Now that I got rid of the losing properties,
Right,
I'm left with the equity, rich ones, the ones that cash flow. They're the mostly the good properties, and I really am reaping the benefits of it right now. It's allowed me some time to breathe and pursue other projects like doing this show, and so now. I would say that did it have to take that long? Probably not. No. I mean, if I had known when to stop, or I think I could have shortened that journey quite a little bit and enjoyed the same fruits.
Well, the thing that you're saying is, and I would encourage people, as I'm here, I guess, to talk from a learner's point of view, is to have a good, sound mentor, because even though Matthew, I've been around him even when we're not on camera, we've had conversations. Some of the philosophies I've adopted and some of the rationales that I've come to as a result of some of the challenges that he just talked about having lived through. You don't have to have the experience yourself.
Yeah, that's true. Yeah, you don't have to blow up on certain things.
And to the extent that having a relationship with someone who cares and trusts, but they're very open about the goods and the bad, because in that episode that we talked about this originally, that was on the TurnKey Investor Show, I said the thing that was one of the barriers to me getting into real estate investing was everybody talked about all the good stuff. Nobody ever told you about the underbelly of real estate investing. And Matthew was the first person I ever spent any time around who was very open about all of it, and that seemed very genuine, and certainly he is. But it gave me the courage to know at least what it is I've got to confront. So as I've dealt with some of the learning curve in management development and change in the real estate market and things like that, I've had the benefit of just some of our random conversations. Either he was telling me about something, or I was asking him a question. That has helped to flatten that learning curve, and I've probably made a lot less mistakes because he made them.
Now let's talk about Wes. We're going to talk behind his back on this episode.
Okay. I'm sure you'll see it though.
Yeah, and regarding Wes, I would say that he has immersed himself. I mean, he does it. I know for a fact he does it both for investment purposes, but it's also a business. In other words, he bought all these properties and acquired all this properties, not because he needs something, because he's bored.
Yeah.
Okay.
Yeah.
I mean, he has a very long-term strategy in that he is going to get a lot of these suckers paid off, and he's going to hold them for the long-term wealth.
Okay.
Now, the difference between he and I is that, like I said, he's immersed himself into it.
Right.
He's an agent, he's a broker, he does manage occasion for other people. But make no mistake, he's definitely holding on to it. Whereas you and I, we take a little bit more of a laid back approach. At least I have evolved.
Right.
I mean, I could have continued to keep doing the real estate and probably would have been done fine. It's just that I didn't have a lot of fulfillment in it. To me, I just look at it as investments, and that's pretty much how I view it. So what do you think in comparing where Wes is at versus me? I mean, certainly his numbers are higher.
Yeah.
But he's definitely much more busier.
Yeah.
Versus me, I'm a little bit more laid back nowadays.
Well, I would say in terms of comparison, you and Wes give the viewers, I guess I won't say the two ends of the spectrum, but certainly, if you drew a line down the middle, there's obviously some on both sides of the equation. Now, there's the business, and then there's the investment. Let's just kind of demarcate.
Well, that's true. That's absolutely right.
So I think that the desire to jump into the pool, a lot of people want to swim, but some people want to become Olympic, swimmers, and some people just want to, enjoy a refreshing exercise experience.
Yeah, exactly. Well, that's a good analogy.
So real estate gives you everything in between as far as that's concerned, but I think that once somebody gets into it, they'll discover. Now, from the standpoint, I think Wes and I are both prodigies of yours in that regard, to the extent that Wes was not doing anything in real estate until he met you, and neither was I.
Yeah, that's true.
Wes evolved into a real estate magnate in some sense, and certainly does it as a career pursuit, and I have kept it as an investment where I've got it fits into my macro personal wealth strategy. And my life purpose strategy, because I want to leave businesses to my kids, and if I ever have grandkids one day, I guess a sense of wealth building, and where it gets to transfer wealth and some knowledge. I mean, aside from my business, my investments, and the real estate, you got to manage those things, and it teaches something in that sense. So I would say that the viewers should get exposed. Now, wherever you are, if you're already investing in real estate, then you can probably relate to this discussion in terms of where you are.
That's right.
Because most of the stuff that I've read and viewed and seen on real estate, and it talks to it almost from the sense of business, something that you're doing perpetually.
Yes, the buying and selling, and if you're into that, if you get impressed by doing all these transactions, buy sell, sure you can make a living, but you're really a trader, and there's nothing wrong with it. Just realize it's an occupation.
Right. Yeah. And I'll just use again using the basis. I said, okay, if I've got 10 properties, cash flowing $200, let's just say it takes 30 years from the payoff. I'll probably still be here, okay, based on my current lifestyle and expectancy. Okay, then let's say if all those are $1,000 a month rent, at some point incrementally that becomes 10 grand a month that's coming in.
Yeah.
And the wealth that goes with the value and appreciation of those properties becomes basis for other things that you can do, is for borrowing against to do commercial or what's that, 1039 exchanges?
1031.
1031.
Yeah.
I'm in the financials.
It's okay.
1031. But just a lot of different things that can evolve to. But the thing that I think that everybody can benefit from is once you start doing it, you start learning so many things that help you to understand real estate investing has many different, like the colors of the rainbow. There are different areas. I think a lot of people get attracted to ideas, but what you discover is what your personal preferences lean toward.
That's absolutely correct. And at one point I thought I wanted 100 houses, and except that when I got up to around 30, I realized, I was like, you know what? Gosh, this is a lot more management than I wanted, and the paperwork was just horrendous.
Now the choice could have been for you to, okay, I'll use a property management company to manage my portfolio.
Yeah.
And I'll just keep adding, and I won't add any more headaches. I'll just add the process of acquiring and then the incremental positive cash flow that you would try to build into the transaction.
Well, where I left it off is I realized that as far as single-family houses go, it doesn't scale well. I know there are people who have far more than Wes and I properties, but I think you will not. I think you will find very few people that will challenge the notion that single-family houses are scale well. Most people will tell you, they'll move on to commercial real estate before they'll get too far up.
Okay.
Like Wes, for example, he disagrees with me. He feels like that, if you're starting out, you haven't done a deal, you could just as well jump into a commercial deal. I tend to take a little bit of a different viewpoint. I don't think it hurts, having done 2 or 3 houses.
Right.
If you don't want them, fine, sell them. But there is a learning that comes with it before you jump into the commercial real estate. But the bottom line is, one thing that Wes and I do agree is that, and this is where we were working towards prior to the recession, is we were making our leap into commercial property.
Okay.
So, because we both had felt that this was enough. Getting 100 houses really wasn't going to further our mission. It was just going to create a lot more work.
Right.
We would have to fundamentally change our business, which was to get away from single-family houses and go into commercial real estate. And we were kind of looking at apartment buildings at that time. And he had a huge interest in storage units. Now, for you, I like your approach because, you haven't expressed to me necessarily that you want to be in the real estate business. You just simply want your 10 houses and get them paid off.
Right.
But I will tell you, Tony, and I'll tell for all you viewers, that you're not going to have to wait for 30 years to reap a lot of benefits. You're going to get a lot of benefits probably after 10 years. So you're going to be you're going to be young enough to start enjoying, even though it is technically not paid off.
I understand.
Because what happens, what you may not realize is that there is an acceleration factor once you get over the hump of starting up and stuff. As you've discovered with these two.
Right.
The hard job is already past you. So you just got to maintain and keep up with it. But the numbers look even more attractive when you get like a good 5-6 years into it.
Yeah, I'm figuring that, I hear things and then I experience things. Obviously, some things you can't experience until that time comes.
Correct.
But I do understand that there's a momentum that goes along with the process. Now, one thing that I would definitely say to the viewers that you will learn is that turnover is, let's talk about it from a positive. Getting tenants to stay is the most valuable thing in the world.
Yeah.
But then when you have to turn around a property, I think I've gotten really smart. And I hadn't had to do it that many times, but again, the benefit of some of Matthew's materials and then talking to other real estate investors and stuff like that, I said, okay, if the two ends of this process are getting somebody in fast and getting them to stay long, after I've gotten a property, I mean, that's like 3 legs of the stool that I want to be darn good at. So, you know, buying right, getting them in fast and keeping them there for a long time, to me, that's how you maximize your profitability. So, I mean, I'm not going to say I've got it mastered, but I've gotten something that's almost a cookie cutter routine that I developed after my first time that is proved almost flawlessly the last 2 times, like bam, you know. I was priding myself, I had a vacancy, and from the time the person moved out until I had a deposit for someone to move in, I did in 12 days. And I'm talking about having to go in and basically do a heck of a lot of work in the property. But it was a system that I used that, you know, I might patent it one day, or maybe we'll have another episode where I'll talk about it, but from the standpoint that was important, as well as screening tenants to find out, yeah, somebody's got the money, they want to move in right now, but I want somebody who showed that they've been in their previous residence for a long time, and they've got all this, give me all the right bells and whistles to say that they're not looking to move when the lease is up to another place. You know, they want to stick it out, stay there 5-6 years, which is where you really start seeing the return on your investment, because you don't have to do the vacancy, the turnover, and all that other stuff.
Well, I think there's a certain strength in having a smart portfolio. Sorry, got tongue-tied there. Mm-hmm. But, you know, you turned it over very quickly, but do you think part of it was, you know, you only had 2 properties to worry about?
Well, I'm sure that aside from the fact that I didn't have another one to worry about at the same. Now, the last time I had turnover, I had 2 properties to worry about, and it was ugly. That's why I got smart. Yeah. But the other thing, though, I guess by comparison, is I had another life of activities that I had to engage in.
Yeah.
So I said there's some elements in there that not getting into the details of it, really, necessity is the mother of learning. Yeah. They say it's the mother of necessity. Well, the necessity is I need to learn how to do it better, because you know it's going to happen again. It's not like this was a once in a lifetime experience. But yeah, the thing I was thinking about is, okay, if I had more, could I duplicate this? So I guess a point that I can share with everyone, when you do have these experiences, you know, if you want to grow a portfolio, a small one or a large one, you know, create models that you document, that you can, you know, transfer. Because to me, that's what management is about. Because if something happened to me and somebody else had to take this process and run with it, I mean, I almost created like a little mini manual of everything I did and the checklist and all this other stuff, and it's something that I can refer or delegate with or something like that. So,
well, you know, what we're talking about in this video is going to be very contrarian to a lot of the real estate materials and the hoopla out there. And you know, I'll be honest with you, I fell for some of it. You know, it's all the flash and all that. But now that I've been in it for a number of years, you know, I mean, no drama is wonderful. Having lots of time during the day to do different things is a wonderful thing. Not getting, you know, I mean, it's just like, it's kind of strange. This recession, in some ways, has been a blessing to me.
That's good.
I mean,
how so?
Well, in that it made me reevaluate everything from ground zero. Mm-hmm. And, you know, and the real estate has never been so low drama as it's ever been.
Wow.
I mean, once I, you know,
did what you needed to do.
Right, exactly. You know, I don't feel the need to have to acquire more. I mean, I've got a sufficient amount of properties, and if I do want to pick one up, I just pick one up. I mean, it's fairly non-dramatic. You know, it's just, you know, always having to buy, and then always having to sell, and you know, always having to look for financing. You know, I mean, for me, it just gets old.
Right. Mm-hmm.
And I really, really like where things are at, where it's no drama. And as you said, Tony, you know, about a model. You know, one of the things is when you get the properties, and you're not buying this out, you get to know the properties really, really well.
Right. Mm-hmm.
You get to know the neighbors really, really well. I mean, the neighborhood and everything. So you kind of grow. The property grows on you, so to speak.
That's true. That's right.
There's such a familiarity. Like your 2 properties, I would venture to say, you may not have had them for like 10 years, but I think you know them very, very well.
I do. I know.
You know the neighborhood, you know the type of tenants. I think you know them well.
That's true.
And I really do believe, and you correct me if I'm wrong, it contributes to the lack of drama.
Yeah, you're absolutely right, because I can think of the other property. Now, the lady's been there 2.5 years. I mean, I know the things that happen. And even from the standpoint of going back to the renovation of the property, some of the things I anticipate that I'll need to do, but in terms of when I'm marketing the property, I mean, I know the neighborhoods are quiet. I know, the schools that are around, certain things that are intrinsic to a personal experience for the tenant, which helps me to also get the kind of performance from the property, because I know what psychographics I'm looking for, in addition to socioeconomics to go there. And again, having a small portfolio, you're able to do that more so than you can maybe if you got 50, 60 properties scattered out all over town. You just don't have the time to get as involved.
Yeah, we had properties all over the place. I mean, it was crazy.
But now let me go to the other side of this, which might be flipping over to the western side of the arrangement, from the standpoint of there's also an efficiency that you get from having to deal with.
No question about that.
Which I can't say I have that, because again, when I have a vacancy every other year or something like that, I mean, even though I press this thing to get it down to 12 days, it's like there's if you got 4 properties all vacant at the same time, I mean, 12 days is really 48. I mean, from the standpoint of,
well, you find ways around it. I mean, it doesn't quite look like that. You strategically hire contractors and stuff, so you won't be in pain for
right.
long.
But I'm saying you can't physically do it all yourself.
Of course not.
What I had to do, I could do myself, aside from something I hired somebody to do the yard and stuff like that. So, there's the things that someone of scale could either share in terms of, or you could share in, which goes back to what I was saying earlier about, okay, if you create a management company, then once you get over a certain tipping point, you can add more demand to it that maximizes the value of it, whereas just being on the edge with nothing else to go in is almost pointless. So as you're developing your portfolio, I mean, from the standpoint, Wes, by virtue of personal preference, I guess would rather be doing that than anything else, I would assume. I mean, I'm speaking out of some.
No, Wes is trying to get to a more drama. I mean, he's definitely.
But he's racing toward a point, though.
Yes, but I mean, I know he's trying to reduce he wants to be no drama too. I mean, there's no question about that. I mean, he's been very active, but he is quickly moving, like you said, taking advantage of the efficiencies. But I mean, I know he would rather have things drop down in terms of drama and turnover.
Yeah.
I mean, in one of our episodes prior, Wes and I did discuss. We are no longer concerned about maximum cash flow. We're willing to take a little bit of a shortfall, just so we can keep the people there for a long, long time and not have to, beat us up with repairs and all that.
Right.
They have a good rent. They want it. They're happy there. They just keep staying. And so, but that is part of the evolution process, and we all get to find out what our points are.
Well, the biggest thing I can say is, get involved. I mean, now in terms of property values and people in challenged situations where you can use creative financing to acquire properties.
Yeah, that's awesome.
And even if you use traditional financing, if you can qualify for a mortgage or investment
good luck.
property. The operative word is if. These are once in a lifetime opportunities. So, I mean, not to hype it and say go out there and do more than is reasonable, but certainly to get one, and as Matthew says on one of his programs, I'm at the point where I just have an extra house right now. Actually, I have 2 extra houses. He said, if you get one, you only got, you got an extra house, you got 2 extra houses. So I think part of my ambition is to get to where when you get 3 to 5, you're in the real portfolio stage. So I'm on my way working toward that. But there's some merits. Maybe the change in the economy and the market has refreshed, it has changed that particular perspective. But as far as the value of real estate investing for long-term wealth development, and also I would say business development, this thing I'll say is I tell people that owning a rental property, a single-family house, is like a business in a box.
It sure is.
Yeah, because
it is self-contained.
It's self-contained. I mean, it's got all the functions of a business without, once you get it and get somebody in there, there's not much else to do unless something,
unless you choose poorly. Then there's plenty to do.
Yeah, and I mean, but I learned from some of the programs, that is the first step in the management process, screening tenants. I mean, it's like
huge.
An employer. I mean, I hire people for my business, and I learn more from real estate looking at tenants and thinking about, okay, just because I can get somebody to do something, what's the opportunity cost of getting that person in there that I got to chase my rent, or they're tearing up stuff,
exactly.
or they're only going to be there for a year and then they're leaving and stuff like that. Versus, the same thing with hiring a person. By the time I invest time training them and stuff, are they going to do what I need them to do? Are they going to stay around and continue to do it for me to get a return on investment? It's parallel. It's a parallel universe. And I would say that most people probably don't have the wherewithal and the acumen or the financing to go out there and start their own business. But if you take the notion that I just presented, even in its metaphorical form, you can start a business with investing in real estate.
Yeah. Well, great. Well, Tony, I appreciate you spending the time to share your views.
Thank you. My pleasure.
For our viewers, because obviously they're used to Wes and I, but I think you bring a very valuable perspective to some of our beginning students or people who are starting out. And they get, like 3 different perspectives as far as growing a portfolio and where they should be. So,
well, I just got one question.
Sure.
Can I come back when I get my next property?
You absolutely can.
Thank
I
you.
might even let you come back even before you bring your next property.
Well, that sounds like a good thing for me too.
Okay, well, you viewers, thank you for joining us on this episode of the TurnKey Investor Show. We hope you enjoyed Tony's contribution here, as I have, and we'll see you in our next episode. Thank you.
Take care.